Well, good morning, ladies and gentlemen. Excited to continue our conversation here today with three gentlemen that all have Ph.D. after their names. So let's have a little doctor's appointment this morning and get the conversation going about the future of the agricultural economy in both the near and the long term in this state in particular. Joined this morning, and I'm going to go from my left, your right, and get closer to me, joined by Daniel Sumner, the Frank H. Buck Distinguished Professor for the Department of Agriculture and Resource Economics at UC Davis. Next to Dan is Chris Bitter, the Senior Wine and Grape Analyst for Terrain, a market and industry analysis team for American Ag Credit and several other farm credit associations. Last but certainly not least, David Magaña, the Vice President and Senior Analyst of RaboResearch in North America for fresh fruits, vegetables, and tree nuts. Appreciate all of you taking the time to join us here this morning. And Dan, I'm going to go to you first, and because I know that you're interested in discussing kind of the longer-term outlook in terms of the indicators that you're watching, things that you're keeping a special eye on when it comes to the California ag economy. To kind of frame up our conversation, what are some of those long-term indicators that you're watching at this point?
Well, first let me reinforce something we just heard from Secretary Ross, and that is the long haul for world agriculture really is an innovation issue. That's been true for 100 years, and it's going to continue to be true for the next 100. And whether it's academic R&D or companies doing things, I think personally the most important thing is continuing to attract innovative people to agriculture. It's remarkable how we've done that in the United States and other places for generations. And if you look at the places that have grown and been successful in agriculture, they're the places where opportunities exist for young people. Because guys like me aren't doing the innovation, really. It's the young folks that are doing it. And we're very successful at that in California. I see it every day with 20-year-olds, incredibly bright people who might have grown up in LA and got excited about agriculture and are going to be the generation that pushes innovation. So let me just emphasize that point for everybody here. Do everything you can to attract young people that are going to be innovators to agriculture, whether it's farming or agribusiness or doing research in some lab or thinking something none of us in this room are thinking. So that's number one, and it's partly R&D, but it's innovative people in agriculture. The kind of challenges we face, I'm going to say the number one for California is frankly dealing with regulations, because those are the big challenges. We can deal with the weather. We know how to deal with the weather. The climate's changing. We'll be able to deal with that innovatively if we're allowed to within agriculture. And let me leave it there. I think that's not to say the regulations are bad, by the way. We could debate each regulation, and some of them we like, some of them we don't like, some are necessary, some we think are overblown. But learning how to deal with them is something that is a challenge for all of us, and partly that's dealing with things like the Farm Bill or the state government. I know there's lots of political people on the program here today. Learning how to work with them is crucial, and to be successful, especially in California, means learning how to adapt to those regulations as well as all the rest of the challenges.
Very good. And Chris, I'm going to skip over you just for now, but we'll come back to you in a second here because, Dave, you were on the program very early on in our discussion last year talking about the outlook that you saw from an economic standpoint in kind of the near term. So now, with the benefit of hindsight, here we are 12 months later. How has your analysis changed based on what you thought was going to happen and the reality that we're facing right now? What is the current outlook? How does that look compared to what you were expecting a year ago?
Thank you, and thank you for inviting me again. Like, as a farm boy, I'm thrilled to be part of this panel and among the industry leaders and decision makers. And then to my second question, I'm happy that you give me that opportunity because, like, as an economist, you know the definition of an economist, right? It's a professional that spends 50% of his time predicting what's going to happen, and the other 50% explaining why it didn't happen. So this year, like a year ago, I was mentioning we were still wondering if the inflation was going to be transitionary or not. Now we know the answer. And monetary policy, for example, everyone got it wrong because we were expecting, the consensus was that the interest rate of reference was going to be 3.5. We are higher than that. So now doing that type of the other 50% of the job, right? So, but there are some things that have moved in the right direction from the supply side. A year ago, we were discussing still a lot of logistic bottlenecks, very elevated fertilizer prices, and obviously in the middle of an exceptional drought. So now we see that port congestions has been getting better, availability of containers, container rates coming down from elevated levels, also fertilizer prices, and the water situation is completely different, going from 0% water allocation to 100% water allocation, so that's day and night. And, but still, on this demand side, still a lot of challenges as consumers continue to trade down and adjust to this inflationary environment. That continues to be a challenge.
So Chris, we've heard kind of a long-term outlook, a short-term outlook. I wonder, as you drill down and look at the particulars of what's the near and the long-term look like for the wine industry, the wine grape industry, what comes to mind for you?
Well, thank you first for inviting me today. I appreciate being here. So I think we have to start by looking at trends that have occurred over the last decade to understand the outlook going forward. So for wine grapes, we actually have to start with the wine industry and understand the wine market, because ultimately wine prices and demand drive demand for wine grapes and prices. So what's happened are two major trends over the last decade. And the first is that wine consumption is plateauing. And that's true for both the US and globally as well. So that's had a big impact on the grape industry. And secondly, we've had a bifurcation in the grape market, or in the wine market, I should say. So sales of wine, value-priced wines, we'll say below $10 or $11 a bottle, have been contracting now for almost a decade, while sales for higher-priced wines, premium and higher-tier wines, have been continuing to grow. So consequently, we've seen that play out in the grape market. So if we look at the Central Valley, grape prices in the Central Valley haven't appreciated at all over the last decade. So in 2022, the average price for a ton of grapes in the Central Valley was $475 a ton. That's almost exactly what it was in 2012. Conversely, in the coastal regions, which produce primarily for the premium end of the market and the upper tiers of the market, grape prices had continued to appreciate. And they've appreciated the most in those areas that produce the highest priced wines. So in Napa, the average price for a ton of grapes in 2022 was almost $7,000 a ton. And that is nearly double what it was in 2012. So starting with that, basically we can't talk about the wine grape industry or make generalizations about it as a whole. We have to kind of look at specific regions and tiers within that grape market. So going on to the actual question, which is the outlook. In the near term, I think we have some challenges for the grape market. So over the last couple of years, we've had a reasonable balance between supply and demand, and we've seen some appreciation across the state. But that was primarily because of restrictions to supply. So we had 3 consecutive smaller than average grape crops. And in fact, the crop in 2022 was the smallest since 2011. On the other side of the coin, we have not had a lot of demand because of these changes in the wine market. So it's really been the supply constraints that have driven the increase in grape prices. So right now, because we've had a big part of the problem or the factors that was impacting yields was the drought and water restrictions. So now that those have been alleviated, that sets the stage to have a larger crop this year. And nothing is certain. We don't know at this point whether it's going to be a large crop. But if we do have a large crop, then we're likely to see some downward pressure on grape prices because wine sales are declining at this point across all price tiers. So particularly in the Central Valley, we could see some kind of softening of grape prices. I think the coastal regions are a little bit better positioned because the demand side is a little bit stronger, but I don't think we're going to see a lot of appreciation if we get crops back to the normal kind of 4 million tons per year range over the next several years. And then you also want to know more about longer term?
Yeah.
Okay, so going into the longer term, I don't see the kind of decline in value-priced wine sales reversing itself. I think that's a structural trend and is going to continue going forward. So that means for the Central Valley that we're not going to have increasing demand for Central Valley grapes over time, and we're likely going to need to see some acreage removed over time in order to keep the supply and demand in balance. So until that happens, we're probably not going to see a lot of appreciation in grape prices over the long term in the Central Valley because it produces primarily for that value tier of the market. I think, kind of mirroring the other trends we've talked about, I think we'll continue to see stronger demand for premium and higher priced grapes, though perhaps not as strong as we saw in the past. So there are a little bit better prospects for appreciation in grape prices in the coastal regions. And again, I think those regions that are most prestigious, Napa, other areas that are very dynamic right now, like West Paso Robles, are likely to continue to see some appreciation over the long term in grape prices. But that's a big challenge is this kind of stabilizing or decline in demand for value-priced wines and perhaps a slowing in growth in the premium segments of the wine market.
So, Chris, I want to follow up on something that you mentioned there, but as I do that, I would encourage all of you, use that QR code, use Slido, submit questions. Let's have the audience be an active part in the conversation, both those in the room and those watching virtually. Would love to hear your thoughts and would love to quiz the panel with your thoughts as well. But I do want to ask about the kind of the bifurcation of the wine market that you mentioned there with the higher demand on some of the more premium products and less on the value. Is that a function of consumer demand for an at-home consuming experience? Is that a function of the restaurant and bar space coming back sort of in a post-pandemic environment? What is really driving that bifurcation and that higher demand for the more quality product?
Well, one of the big challenges that wine has faced over the last decade is we really have growing competition from alternative alcoholic beverages. So at first we had hard seltzers, and everybody was buying hard seltzers. And then we had, today we have RTDs, ready to drink things. You can go buy a cocktail in a can. And a multitude of new products that have entered the market. And then just spirits there's been a big upsurge in people buying spirits. So at the low end of the market, I think that those trends have really impacted the lower end of the market more than they have the upper end of the market. It's those folks, it's not the people drinking the $100 bottle of wine who are going out and now buying seltzer or hard seltzers, right? So it's had a bigger impact on that end of the market is the primary reason for that bifurcation. Now, we've had a lot of shifts in the wine market since the pandemic began, a couple of years ago in terms of, cessation and on-premise sales for a while, and then those are back now, and off-premise sales are declining. But really, I think it's more that the competition with other kind of segments of the alcoholic beverage market have hit that value end of the market harder than they have the upper end of the market. I'll say one more thing too is there's also been somewhat of a movement in the U.S. in terms of people looking more at health and wellness and trying to moderate their alcohol consumption. And the idea is that a lot of these folks that are moderating their alcohol consumption may be drinking less, but they're drinking a little bit better because they have more, left to spend on that wine, and they're still spending it.
Dan, you looked like you had a thought that was coming to mind there.
I'll say one thing that Chris would have said if you would have. I'll say one thing that Chris would have said if he would have taken a little more time, and that is California's wine industry is in a global context. And we export wine and we import wine both. We're at the high end, we're facing imports from fancy places in Europe, and we could all name them. At the low end, we're exporting places to Asia, for example, where we're competing with the low end of Europe. And they produce a lot of bulk wine just like we do. And this is the stuff that ships into and out of the United States in 1,000-liter plastic bags. And bottled wherever it comes. And it's coming in and it's going out. And that's a tough market for us. So watch exchange rates and all kinds of things and labor prices in Spain. There's all kinds of things around the world that make our industry have to be competitive. when you think about wine markets, you got to think about the globe as well. And I know Chris knows this, of course, but I just wanted to get it into that conversation.
Well, and I want to stick with you here, Dan, because I do wonder, as you look at sort of with the worst of the pandemic market shocks and market signals behind us, with a lot of that in the rearview mirrors, what are you watching in terms of post-pandemic norms, consumer behaviors that have changed as a result of the pandemic, and what impact that might have on production agriculture throughout the country and California in particular?
Every little industry is different. Every big industry is different, for that matter. And we don't predict. We're talking about across agriculture as a whole, and I'm not going to tell you the next unexpected thing that happens. I didn't predict a war in Ukraine. Maybe I should have, but if it rains, it pours, and we have floods, not droughts. But those kind of things accepted, the long-term trend is that we are in very competitive markets. Here at home, we compete with each other in the sense that one thing behind grape acreage is what's going on with tree nut acreage. So for years and years, we weren't expanding this wine grape acreage in the Central Valley, partly because it couldn't compete with nuts. Well, now nuts don't look as strong, as certainly almonds don't look as strong recently, and so that's going to put some downward pressure on the basic resources. When it comes to water, I'm going to be on a Sigma program tomorrow. Maybe that's a good thing, because a lot of people are saying we're going to have to leave some land idle. So all of these pressures, and I didn't get to the pandemic because frankly, one thing we've learned about the pandemic is we get back to normal pretty quickly, and I think we have, except, again, there are very specific things in particular markets that differ one from another. And Chris did a good job of highlighting those, particular products within certain parts of the wine industry.
We can't convene a panel of ag economists in this state in particular without talking about labor and its impact on bottom lines of operations. Dave, I wonder, when you're talking with your clients about some of the things that they're facing and some of their hurdles to profitability, what role is labor playing in that conversation for your clients?
Well, labor has been a challenge for years and will continue to be the case. So talking to clients, for example, even in Mexico, when I go and visit clients in Mexico, they say one of the main limiting factor is labor and labor cost. Minimum wage in Mexico has doubled over the past 3-4 years. And also availability of workers is becoming more of a challenge, and that will continue being the case given all the underlying demographic changes. Like just one point that I was mentioning last year was natality rate. In the 70s, an average size of a family in Mexico was close to 7 or 8 children. So you had a lot of workers because they were like most of these families living in rural areas, they just wanted labor to help in the farm. So now you have natality rate that has dropped to close to 2 children per family. And so we will not have the same availability of workers that we had in the 90s or 20 years ago. And that will have to be replaced by some automation, technification, and definitely innovation will have to be part of that solution.
Well, and let's talk about automation, because we're going to have a further discussion on that in the later in the program. So stay tuned, everyone. But I do wonder, as you look at this from an economic standpoint, walk us through the numbers in terms of what it makes, what goes into the decision-making process. Obviously, no two machines are the same, no two operations are the same in terms of the labor cost that's being replaced by automation. But how are you working with your clients to try and figure out whether or not pursuing automation is going to be the right approach for their farms?
All right. So first I want to point out this. This is kind of ironic. I was listening to the news this morning, and they were saying we have lost more than it was a big number of jobs because of artificial intelligence. So we are a growing population, we're losing jobs to artificial intelligence, and at the same time, we're facing challenges in terms of ag workers. So there is no one-size-fits-all solution, obviously, And this has to be discussed like in a more broader term in terms of challenges in terms of resources, a lot of regulation, and we can spend a lot of time discussing regulation and how that confronts the desires of building or producing more food. For example, or more sustainable or even regenerative agriculture is now a buzzword, but that's nothing new. For example, in the 80s, it was it was a topic that was hot, and then for a couple of decades it was not, and now we're hearing that about not only sustainability but also now more regen ag, and at the same time you have all these regulation. Let me just tell you an example that is not obviously not exclusive to California. For example, in the EU, they have aggressive plans to reduce carbon emissions, to improve soil health, to improve biodiversity, things like that. And at the same time, they have some regulations. For example, the definition of gene editing. It's quite different in the EU compared to the US or Brazil or Australia, where this gene editing in the EU is similar to GMO. So those type of innovations have the potential to be able to produce food in a more efficient way. So this month they will be discussing in the EU how they will be modifying this definition of gene editing, if they're gonna be completely changing that, or if they will continue to have some restrictions on that one. So I said a lot of different, I touched on a lot of different points, but that's just like how complex this problem really is, and there is no single solution, but depending on the industry, the good thing is that now we have more people, particularly younger generations. We have not only the most diverse ethnically, but also the most educated generations, like for example the Gen Zs, and they will come up with some good innovations to solve these problems in the next few years.
Very good. I want to go to a question that was submitted on Slido and maybe tweak it just a little bit for the sake of the conversation here. The question asks, how do we imagine California's flooding, current and expected, impacting the commodity markets? But I want to broaden it out a little bit just wonder how we expect the issue of water availability in general. And Dan, we'll start with you and kind of work our way down the stage here. How the issue of water availability and water prices impacting California agriculture in the near and long term. What is your outlook on that issue at this point?
Yeah, well, it's going to continue to be central, competing with farm labor, depending on the industry and exactly where you are. Among the supply side drivers for agriculture, water and people go together in a sense. Workers go together. Some of the most water intensive crops are the ones that use lots of labor, and it depends on which valley you're in. We're sitting here in the Central Valley where we pay attention to snowpack, and of course this year we have a massive flood. I haven't seen any estimates that suggest, say, California farm revenue will be very much affected by the floods this year. And the same thing happens with droughts. The price of milk will be in the tank this year rather than the last couple of years. If you look at the bottom line of how much revenue does California agriculture produce, that probably has a bigger effect, and that's a global thing. So in terms of the numbers of acres affected by the floods, it's absolutely terrible where it's terrible. And then much of the rest of the state, well, a lot of water, that's kind of a good thing compared to a drought. Let me go a little bit further about water. I do think Sigma is a big deal, and I'm optimistic that we're going to do things to improve the way Sigma works with groundwater recharge and other things, not just on the science side, but I think a bunch of lawyers and engineers and economists will figure out the regulatory side of that. So that we're not, now, it's not going to happen this year or 3 or 4 years from now. probably the current set of regulators have to retire before something new happens. You know, that's the way things happen. You're never going to convince the current regulators to change their minds, but the next generation will change it. So whether that's 5 or 10, depending on who exactly we're talking about. But I think what has to happen is we have innovation such that an individual farmer has the right to manage their groundwater, and we have the technology to figure out how much water somebody's put down, and we're not being managed by county governments and water district governments and state governments, because we know that doesn't work. What we haven't yet tried is really having individual farmers have the incentive to actually do something for themselves, including store water for 20 years and sell it to their next door neighbor when it's really expensive. So I'll put my hand up and say I'm in favor of price gouging. That is to say, I want to create it. I think we will do much better with groundwater, which is our long-term problem. Much better with groundwater if we create incentives for individual farmers to innovate on that. And we come back to the theme that David pushed about innovation, whether it's technology like gene editing. And here I'm talking about innovation with institutions, laws, and the engineering. And I think we can get there.
Chris, your thoughts on how flooding and the broader issue of water availability is impacting the wine industry and the wine grape industry?
Yeah, so first off, flooding wasn't a particularly pronounced issue for wine grapes this past year. So most of the effects of these winter rains are thought to be beneficial. You know, they've helped to alleviate the drought and water scarcity that we've seen in recent years. But over the long term, you know, water is going to be an issue for grape growers just like it is for everyone else. So I think the good news is that there's a lot of potential to reduce water usage in wine grape growing. So wine grapes are relatively water. They use quite a bit of water, but they use less than some of the alternative crops like almonds, for example. And they're more economically productive per unit of water use, though, than almost any other crop. So they're an appropriate use of water for the state of California. But growers are going to have to learn to use less water because our water resources are so constrained. So luckily, we've had a lot of studies that show that you can maintain quality at much lower levels of water application than is typical in the wine grape industry. So I think there's a lot of potential to reduce water usage and become more efficient for the grape industry, and it will certainly have to do that.
Well, and before we hear from Dave on this, I do want to stick with you for a second, Chris. Just thinking through, I understand that the industry is losing some acreage within the state. You know, can you kind of walk us through those numbers and walk us through the reasoning that we have at this point? Is that a urban encroachment issue? Is it a water availability issue? Is it a farmer looking for a more profitable crop issue? What is leading to that loss of acreage?
So to set the stage, first, wine grape acreage peaked in the state of California in 2018. I think the total is like 637,000 acres. And the most recent report that just came out this spring says we're at 615,000 acres. So we've lost a little bit of grape acreage. But that's not so much an issue of encroachment or alternative crops, but simply that we have this slowing demand for wine in this country, which means slowing demand for wine grapes and lots of competition from, as Daniel said, from other areas of the world. So it's more of a demand side issue is the reason that we are losing wine grape acreage. Mm-hmm.
And Dave, going back to our subject about thinking about the issue or the impact of flooding in the near term and water availability in the near term, what comes to mind, and what's been your guidance to folks that are scratching their head and asking you for advice on that subject?
Yeah, I'll give a couple of examples about this. Some of the challenges of a wet winter, particularly delays in plantings, for example, for processing tomatoes. I know, like processing tomatoes, like the global inventories of tomato paste continue to be at historically low. So prices are going to be still quite high for 2 more seasons, this and the next one. But this delay in plantings is going to lead to late harvesting, and with all the challenges of a late harvest, right? So that's just one example in the processing tomato industry. Another one is some supply gaps, for example, in leafy greens or in strawberries or other berries, and we've seen that operators have been trying to extend the seasons in other growing regions. And that's a trend that we have observed for the past few years, how either is a demand pull or supply push, how we see increasing imports, for example, in berries, namely strawberries or blueberries or even table grapes, given the fact that now consumers, they want year-round availability of fresh produce, and we see more operators diversifying their growing regions. So there is a friendshoring in the fresh produce as well, and we see more coming from places such as Mexico in some cases, such as some leafy greens or even table grapes, blueberries, and as also from Peru. A lot more coming from table grapes, blueberries, and also avocados. So some supply gaps, it's some of the immediate impacts of these floodings. And in the longer term, obviously water will continue to be a challenge, but finding the right spot at the right crop to grow efficiently, that will continue to be one of the main challenges and also opportunities for the industry as to remain competitive.
Dave, I want to stick with you and then work our way down the stage the opposite way here. Question from the audience wondering, what macro ag trends does the panel anticipate in the next 2 to 5 years, given continued inflationary pressure as well as a potential recession? What's the macro trends that you all are watching?
All right, macro trends, you see economists again have been predicting a recession. Now the probability of a recession this year has declined now that the debt ceiling has been, that deal, we have a deal over there. But the probability of a recession in 2024 is still quite high. Some people consider like a 50% probability, probably 60%, something like that. So inflation will be declining in the next few years, but in the longer term, we will continue to see this massive collision of forces between increasing demand for food globally and also facing these supply side constraints. There are obviously water, labor, regulatory constraints, things like that. So in the future, obviously a lot of opportunities to continue providing food for a growing population, and not only a growing population, a growing middle class population, particularly in Asian markets.
So I think the economy is the biggest trend impacting the wine industry right now, at least in the short term. So it's a funny economic environment right now. The economy is actually growing, and unemployment is at record low levels still or near them. But consumers are very pessimistic, and when you look at consumer confidence surveys, their assessment of current conditions are they think things are okay right now, but they're really kind of dour about the future, and that extends not just from low-income consumers, but also to those in the top third of the income distribution. So I think in wine, we're seeing these consumers spending like it's a recession, even though it's not. So the question is not necessarily whether we go into recession or not, but it's when is this uncertainty about the future going to be alleviated? And that's what I think we need to see. And if we go into a recession, I don't expect it to be severe, but I think we need to see kind of this uncertainty alleviated before we start seeing consumers open their pocketbooks and spending on wine again.
Yeah, I want to focus on just two things. One is the labor force participation rate. We all talk about unemployment numbers, and that's natural. But what we still see in the United States is very low labor force participation relative to our history. And that means that does constrain the labor market, even with low unemployment. It's not the unemployment, it's the fact that there's so many people in age groups where they would normally be in the labor force that just aren't in the labor force. And how do we get the jobs to be more attractive to people on that score? And that's a real challenge, and it's a longer-term challenge. The second thing I'll mention is interest rates, and it underlies inflation predictions and other things. And I think the answer in agriculture is we're waiting to see it, in the sense if you look at land prices or rental rates even, you don't see the higher interest rates really factored in nearly as much as I think is on the horizon. And a lot of us were very worried that if interest rates continued to go up, those of us that remember the 1980s know what happened to land prices in California and lots of places when you had high interest rates and people had built-in inflation and then it didn't happen. So real interest rates were high. We haven't yet gotten there, but there's a lot of difference between planting 1,000 acres of pistachios with a 2% interest rate relative to even a 5% interest rate. And I don't think we've really seen that in the data yet. It may be out there, but we're not seeing it in the data yet.
Dan, I want to stick with you for a second here because we have a question submitted asking about the Farm Bill, saying that California, the question argues, does not benefit as much as Midwest and Farm Bill programs. But are there significant upsides or opportunities within Farm Bill discussions that folks in this neck of the woods should keep an eye on?
Of course, and it's certainly true that traditional Farm Bill expenditures, the old commodity program kind of stuff, still is focused towards the crops that are grown more in terms of share of agriculture in the Midwest and the South: corn and soybeans, rice, cotton, etc. Now we grow some of those, but they're not a big share of the agriculture here. I want to say two things. One is commodity program expenditures are now smaller than crop insurance expenditures, and of course most of the crop insurance expenditures also go to corn and soybeans and crops we're not growing. But California does receive crop insurance benefits and significant benefits for lots of specialty crops and everything else. Now it ends up, if you calculate it on the base of revenue, 2 or 3% of revenue. So this is not a massive, the subsidy is 2 or 3% of revenue. So it doesn't change a crop from being profitable or not. And I emphasize that crop insurance, people talk about it in terms of risk management, and that's a good way to talk about it politically, but it's money, it's a subsidy. People don't buy unsubsidized crop insurance. They buy it when you invest $1 in crop insurance and you average a $2 return on average over the decade. So it's a subsidy. And it may be a perfectly good subsidy. So I'm not criticizing it on that basis. I'm just clarifying some language. The other thing is the dairy program. Of course, milk is the biggest commodity in California. There's a dairy market program that pays a very high pure subsidy on average for the first couple of hundred cows. And it's real money. The average dairy farm in California will get on its first couple of hundred cows an average of $50,000, $100,000 a year. This year it'll be more than that. That's great. And here, for a typical commercial dairy farm in California, it'll be 1 or 2% of revenue. In parts of the upper Midwest, New England, it's 10 or 15% of revenue. It keeps farms in business, and that's what it's there to do. Now, keeping farms in business in other parts of the country lower prices. So on net, it doesn't take rocket science to do a calculation and say on average California dairies lose from that program. The price effect, lowering prices a little bit, is enough to overwhelm the direct payment from the government. That program's not going anywhere. If anything, it's going to get more generous. But there's a clear regional bias related to farm size. It's not like people say, gee, we don't like Californians or people from Idaho. They say, we've decided we're going to keep these little farms in business. Okay, but that ends up being a negative for the industry here. That's just one example.
Very good. We've got just a few more minutes in our conversation here, and I want to just throw this question out here because, frankly, I'm curious how y'all are going to respond to it. A person asks, if you had $10 million to invest in ag technology, where's your particular investment going? Chris, I'll start with you on that one. If I give you a $10 million check and tell you to invest it in some form of agricultural technology, looking for the greatest return over the years, where do you think that investment is going to be best spent?
Spencer, I don't have a good answer for you on that one. So maybe we'll let these two weigh in on it. Yeah.
By the way, I support the wine industry from the demand side, and I will continue to do that. So
David, if that's what you're doing.
I wouldn't spend all that money on that one. So, yeah, probably there are a lot of different innovations being needed and also happening from all the way from the input side to the consumer side. I will mention just a few. For example, artificial pollination or precision pollination. And also another segment that is being quite active in the industry is how to improve genetics for fruits and vegetables. Not gene editing, as I mentioned before, but just traditional breeding, and to adapt new cultivars to be more input efficient and more output consistent. So having higher yields of a higher quality fruit, things like that, to all the way to post-harvest solutions to extend shelf life and things like that. Oh, by the way, I'm exposed to a lot of different of these startups, given that in Rabo we have a startup platform and we connect those with corporations and firms that need that. So I don't have a single solution, but there's a lot of alternatives where to invest that money. There is a lot of innovation happening all across the food value chain. So probably a good mix on portfolio from the input side all the way to the post-harvest solutions, things like that. That would be probably not put all the money in just one solution.
And I'm going to reinforce what David just said. When I think about investing, I think about a very long horizon, sort of my grandkids' horizon, that sort of thing. My youngest grandkid just got out of kindergarten, so I got a pretty long horizon thinking about her grandkids. And that's the way you think about sustainability. You think about a very, very long horizon. And for that, I would reinforce the biology, the biological sciences, the innovations in biological science, whatever is going to fall next after the current generation of gene editing. And it's partly, maybe I'm influenced by hanging around with biological science geniuses around Davis, and there's plenty of them around, that I just think the opportunity there, whether it's the wine industry or industries we don't yet know about, it's the next crop that's coming, that somebody's going to figure out how to deal with it in a way that is innovative in ways we don't know. So it's to look for those kind of companies, and they're the smallest of the companies right now when you think about that long-term horizon. I think within that, of course, you diversify, because picking a winner at that stage is impossible. But I think there's huge opportunities in applying innovative biology to food and agriculture.
Very good, and we've just a few more minutes here, and so as we wrap up our conversation, I do want to ask, and Chris, I'll go to you here, wondering how do you all kind of use or view your predictions in the context of climate change and things that you're anticipating might impact the industries, not only here in California, but around the world as we do interact in that global market, as was mentioned earlier. How do you measure for the impacts of climate change as you think about the future of the industries?
Well, I think, first of all, we have to
That's a tough one, too. So obviously climate change is a really important issue for the wine industry. So wine grapes are adapted to grow generally in a very narrow range of weather conditions and climatic conditions. So it's very susceptible to climate change. In terms of how I use the information that we have climate change, I guess it's just in making sure that everybody's aware that climate change is occurring and that there are ways to mitigate the potential negative consequences, which are lower yields, lower quality, and perhaps even like more volatility in the yields from year to year. So there are a lot of ways that in the wine grape industry that you can adapt to that through changing farming practices, such as using canopy systems that better, or canopies that better shade the grapes, and new trellising systems, to planting grape varieties on your site that are more resistant to higher temperatures and heat and drought. So there are a lot of things that can be done in the wine grape industry. And climate change is gradual, although we have punctuated some more severe weather events now. But there's plenty of time to adapt to it, and that's the key way that I use my understanding of climate change, is to urge people to think and take a long-term perspective and start planning now how you're going to adapt to these changes as they occur.
Got a minute or two left here. Dave, Dan, any thoughts on climate change and how you use that as in your near and long-term outlooks?
Yeah, just one basic classification. One thing is mitigation, and the other one is how do you adapt? So adaptation versus mitigation, and obviously there are a lot of different factors. In terms of mitigation, we've seen a lot of these large companies making aggressive commitments to reduce Scope 3 emissions, for example. And in terms of adaptation, I already mentioned a few, adapting new cultivars to specific growing regions where you can continue to produce food depending on specific growing conditions on that term. So that's a way to adapt, and identifying microclimates and around the globe, as we see like now, not only in California, but across the globe, to have these more diversify the risk of having an adverse weather shock. So so adaptation, mitigation, there is a lot of different initiatives and also alternatives to do that.
Let me just say one thing about adaptation, actually two things. One, here in California in the short term, we're going to be adapting more to climate policy than to climate itself, because we have an aggressive policy about mitigation that the California government primarily is emphasizing. And so industries here will adapt to that policy. In the longer term, I want to emphasize that adaptation has to recognize that a prediction I'll make, people are going to continue to eat and drink, and that means the demand really will be there. And so climate change in other places matters a lot too. So if you're an almond grower in California, you could say, gee, I got to deal with my own climate change. But if the climate changes in China such that they become the premier almond grower in the world, that's big news. And so be aware that our climate, whether it's wine grape growing places in the world that face climate change, or corn and soybean places if you're a dairy farmer buying feed. And so climate change is global, and we have to, no matter what we do, we always have to remember the global nature of climate change.
Very good. Well, this discussion could continue for quite a while longer, but unfortunately we are looking to keep ourselves on schedule here, so we're going to wrap things up. At this point, please join me in thanking our panelists.